So you create a platform where you invite the consumer to come and also invite the infrastructure investor or the entity to come. And the entity managing the infrastructure will come and make a presentation and tell the consumers, oh, I've been supplying you power all this while, and this infrastructure cost me 1 billion. This infrastructure cost me 2 billion. But I need to replace all of them, and I need to replace them in 3 years. In replacing them, it will require me to adjust your tariff by 2-3% so that I can get funding to come and upgrade to keep giving you the light. So the consumer will say, oh, is this not too much? I want the light, but is this not too much? Then we, the regulators, will come. Okay, since the investor is requesting for a tariff, the consumer is saying that it's too much. Let's look at a common ground. So we take the investment and analyze them, do benchmarking, compare it to other places, and realize that, oh, what the investor says he wants to put in, this 1 billion, 2 billion, if you compare the prices in other jurisdictions, is actually about, let's say, 900 million. That's one. The investor, investors are so sharp. They want to always recoup their profit within the shortest possible time. So they will say, oh, payback period should be 2 years or 3 years. Then we will then also say that, no, I mean, if you do it 2 years, you front load the cost to the consumer. I mean, immediately the tariff will go high. Then over time, the tariff will then begin to decline. The consumer doesn't like it that way.
Yeah.
Can you spread it for a very long time? Let's say 10 years, so that the unit effect on the consumer will be less. So that's the balancing act. Again, there may be instances where the investor wants to go for a loan of, let's say, 50% interest or let's say 50% interest. We will say that no, let's split the loan for the project into two, what we call debt and equity. You can go for the debt, but make sure that the debt covers 70% of the investment you are bringing in. And then you must also make effort to take about 30% of your own equity to bring it in. And it also affects the final value of the project so that it will have a less impact on the investor, on the consumer. So we do that analysis every 3 years for the utility service providers. So we call it multi-year tariff order.
Okay.
So every 3 years, we'll look at the infrastructure base or the regulated asset base of the utility service provider and ensure that it is up to date in terms of depreciation. It's also up to date in terms of the cost of the product itself, the cost, investment cost, the loans, the amortizations. We put all together to ensure that really, I mean, the infrastructure the utility service provider is using to provide the service are cost reflective. When we do that, we then come out with a tariff for the multi-year. Then we announce it.